I'm honored to be here, and I'm thankful to be here, and hope to make this a bit interesting, and I'll get into that in a second. Also, Robert, great to see you again. He was telling me that, and I did not remember this, that when we met and when we were on a trip in Japan, which was a still memorable trip that I talk about many a times, that included the House of Nomura, and that included going to the mountains in Akone and some really wonderful things, mixed with a lot of business. So it was really quite fun to do. At the time, we were looking at doing a lot of investments in Japanese companies and Japanese equities, and yes, I was out in October of 1987, in case anybody was going to ask me that question. You could ask me that question later. What I will ask some of you, though, is, does anybody know where the Tokyo Nikkei Dow was in 1987? Anybody? How about 40,000? Does anybody know where the Tokyo Nikkei Dow is today? 10,000? 12,000? I don't know. I haven't looked it up lately, but so, one has to be careful to say that things only go up. If it's repetitive, that's going to be interesting. Also want to actually say thank you to my three biggest cheerleaders in my life and my business, which my wife and my two kids actually joined, and they never come to these things, so it's great to have them here as well. So, all right, with that, let me give you a little bit of background about where this actually came from. Most of the time, I talk about my passion, which is corporate foreign exchange. And about a little bit over a year ago, I was asked by the FEI, which is the Financial Executives Institute, to give a talk in front of about 250 whatever, really C-suite, finance, accountants, controllers. And I said, oh, that's great, no problem at all. I'll talk about corporate foreign exchange, how it impacts from the balance sheet to translate into foreign exchange gain or loss, and how it goes da-da-da-da, and I'm going to start having people glaze over here real quick. So what they said, oh, that's really nice, but can we kind of expand that a little bit? And luckily, they asked me that on a Friday afternoon, so my family didn't see me, because I actually said, well, this is going to be an interesting challenge to actually really think about what would I talk about to broaden it. And what I thought about was, well, it's interesting to kind of intertwine what I've done professionally all my life and the corporate currency side with actually building and growing and selling a business. And this is my second business. So I want to kind of take through that, and what were my learnings? Because really, when I look at those days and I look at starting, for example, this company, there was nothing out there that said, hey, here's this stage and here's what you should be thinking about. So the idea of what I want to do today is, and I will throw some things in there, so I'm not the monologue that only talks, so I'll throw some in there, and some of us I will let you read, and some of it I'll read off. But this one is, I like Socrates to start this off by saying, I cannot teach anybody anything, but I can only make them think. And that's really what I'm hoping to achieve today, is to really, for some of you who may be thinking about starting businesses, thinking about running business, being in certain stages of businesses when you go in there, take maybe 1, 2, or 3 things away from this, and that's really what this should be about. It shouldn't be about, hey, here's a roadmap to success. Let me tell you what the roadmap to success, the key is. Be lucky, okay? So, but, I learned since the only thing you can really do is then create luck by working really hard. That's the achievement of it. So really going through that today, and I think I will go through the 5 stages. So from an agenda point of view, what I'm going to do in each one of those, after talking about background and a little bit about currencies, and when I think you're about to glaze over, I'm going to switch away from currencies. Don't worry about it. It won't be that long. But in the 5 stages, I really wanted to look at what are the key focal points? What are the things, what are the learning parts of this? And I'm going to do that in every single one of these stages. Number 2 is, what was the most important team member in that area? If you had to choose one, which is always difficult because choosing one in a team is difficult as you're building a team. But what was the key hire, key person, and what was that about? And hopefully I engaged some thinking in there. And then third, about what were the learnings? I felt that there were some interest ones, but quite frankly, I wish somebody would have told me, and I probably would have done that differently. So it really isn't like, well, I got all these right. It's about, I get these questions a lot. What did you have? What did you learn that was different? And so hopefully I engage in that, and I know it's going to be hard, but I'm going to really try to get you guys to really think and engage with this as well. So let me kind of throw out a couple ideas here, and let's talk a little bit about currencies. Currency. What is that a share price of? Anybody? Currency, by my definition, is the share price of a country. It is the value of that country. It is truly the way a government typically negotiates and values and, quite frankly, may get their own economies going. It is probably the single biggest thing that gets economies going is what governments do with their currency. They may be in a basket, they may be tying it, they may be free-flowing it, they may want to control it. And over the years, we've seen a lot of different stuff about currencies, whether that was gold-based in the 60s, 70s, when you're talking about the French franc, all of a sudden the government decides in I think it was about 1992, all of a sudden saying we are going to control outflow. The French in 1992, whatever, somewhere around there, said you can't take more than 5,000 French francs, which was about $1,000 at the time, out of the country. We're not talking 1950s here or 1920s here. We're talking about 1990s, a G10 country controlling outflow of their currency. So the currency is and remains a very major part. If you think about what happened with Russia a few years ago with the devaluation for certain reasons, and quite frankly, basically on a quarterly basis today, you have currencies on top of the NIS, and we'll talk a little bit more about that. So think really hard next time you think about currencies. Okay, that's the value of Japan. That's the value of Europe. The question you should think about in Europe, and I was an opponent to this with Sir Jimmy Goldsmith and others, was should the euro really be the one currency representing all those countries? That's a good and interesting discussion. I'm not a fan of it because I also think that my company's share price, our company's share price, shouldn't be tied to IBM. It's the same thing. You're tying Germany and Italy together. Inflationary growth versus, debtor nations, and should you have Greek in there? So these are some of these discussions one has to have and one should think about when it comes to currencies. Let me ask you another question. What do Japan, Korea, China, Germany, and Taiwan have in common? Come on, guys. Give you a little hint. 2016 report from the United States Treasury, Foreign Exchange Policies of Major Trending Partners of the United States, International Affairs, said these are the countries who are manipulating the currency in such a way that they're actually creating an unfair advantage. It wasn't under this presidency, so maybe a little less bias. But at the end of the day, it was that report that is being used to really think about it. Now, you can make the argument on each one of those. You say, well, how's Germany manipulating it? Anybody thoughts? Why do they think Germany's manipulating it? Anybody? Yes. Pretty close, yes. I would phrase it a little bit different, but absolutely in that direction is if the euro didn't exist and the Deutschmark was the currency, a Mercedes-Benz and a Bentley would be the same price. So what they're doing is they're saying, I am actually keeping the currency low. I phrased this term a few years ago. That's actually, I called it the race to the bottom in a currency war, because really, short term, having a currency depreciate actually can be a competitive advantage. Now the question then becomes, is that long-term good, or are the assets of that country becoming too cheap? So, currency not important? I think it's about as important as it gets. All right, I'll give you another question. This will be a little tougher. What do you guys think the daily volume of currency transactions is? How much? 5 trillion. Thank you. Very well done. $5 trillion a day. Now let's put that in relationship. Next question. Well done on doing that homework. I'm going to ask the next question, but I'm not going to ask you, just to be a little fair. But if you know the answer to that question, I want you to tell me that's the answer to the question. What's the daily volume of the New York Stock Exchange? What is it? Yeah, you're really close. $30 to $40 billion. Think about that. Now let's add the NASDAQ into it. $5 billion. 1%. The New York Stock Exchange and NASDAQ combined are 1% of the daily volume. Sorry, 0.1%. 0.1%. 0.1%. 1/100th. 4 trillion to 40 billion. Big market? I would say that's a big market. All right. What I wanted to do is really give you a little bit of an idea on the background on what we did here, so you have an idea of what the company does, and then I'm going to go really into the 5 stages as well. So currency impacts corporations. And the way you think about it is when you really value companies, let's talk about public companies for a minute, you should think about how much money do I make per share? If I own 100 shares, how much money do those shares make? And forget about the value going up and down, just the pure, what's my return on that share stripping out? So you go look at your net income per share, your earnings per share, EPS. First thing that you always hear about is, well, a public company came out and they hit their earnings, and that meant they were at $1.33. Currency often takes a lot of that away. Now, let's talk about how meaningful that can get. A typical company guides, if they're $1, $1.10, every quarter, at the beginning of the quarter, they first tell you what their earnings were, and then they turn around and say, we expect to be between $1.03 and $1.05 in our earnings. What happens when they come in at $1.06? Up, right. What happens when they come in at $1.02? Down. Does it go up equally up and down when they miss by a cent? No. So that's actually asymmetrical. So when you think about 1 cent earnings per share miss, it's all of a sudden becomes pretty significant. So the predictability of earnings of a company becomes really important. Now, I'm not going to get too much into the details of that, but just to kind of give you a background is, this company we started in 2000 and really wanting to solve the problem of having companies be basically agnostic to currency impacts. Well, you either do that by creating one global currency, good luck with that, or, and I know we can talk about bitcoins and all these fun, interesting things, and I hope I get some of those questions out, but at the end of the day, the other way you do it is you manage it. You know your exposures really well, and you figure out what risk you're willing to take and not, and quite frankly, more importantly, what the shareholders are willing to take and not. FiREapps solved that problem. And being here at this university, at Thunderbird, really honed me further into taking this and saying, there is a real problem to be solved. How do you solve that problem? Well, that's probably a longer discussion, but in very basic terms is, you need to be able to access the right amount of data. You need to ensure it's accurate. You need to ensure it's complete. Then you need to be able to transport that data. You need to transform that data. And you need to make it actionable to the point that the computer can say, buy $57 million and sell yen right now to protect my exposure. Today, that is fully automated. There's lots of companies, and you see some of those up there. I on purpose left the small cap company there. I was hoping somebody's going to call me on Uber on this one, but when they were a customer, they were a small, well, no, sorry. When they started becoming a customer, they were a small cap, and they're still a great customer of ours, so I thought I'd leave them in there for that. But take an Ericsson. We just won a bunch of awards with them for Ericsson. There's only one country Ericsson isn't in. They do 90% of their business outside of Sweden. You think they have a currency problem? They got a currency issue. Do you think they have a lot of professionals who work on that? Absolutely. There's only one country they're not in. Which one is it? There you go. North Korea. Very good. I think he's seen that webinar before. Let me ask you a Google question next. So, they really think hard about it, because at the end of the day, if you have yen laying in cash, just to start with that, in Japan, and the yen goes down, and you're a US-based company, your value just went down. It's as simple as that. And if you have a 10% margin business, and you have quarterly volatility of the G10s being between 10 and 12% on a quarterly basis, if you had 100% exposed to that currency, you could lose your entire earnings every single quarter. Is that important? That's pretty important. So what we did is we said, first of all, how do you get through that, and how do you actually establish that? Because I don't want to run around the world implementing on-premise. At the time, that was still in 2000. People said, well, that's the only thing you do. I like brick and mortar stuff. I like that it's right here sort of thing. Nope. We're going to actually pull all your data out, and we're going to put it into our private cloud. I said, you got to be kidding me. You think you can get all the data of all your accounts payables, all the accounts receivables, all the cash, all the intercompanies of Google, and pull it into a public cloud or a private cloud? At the time, private cloud. Your cloud. FiREapps cloud. Where is it? Well, we're not going to tell you unless you sign really strict NDAs, because actually, if you put that data in our cloud, nobody knows where our cloud is, but they know where yours is. Pretty forward thinking on that thing, but that's the only way we could quickly help, because companies don't have time to spend a year or more trying to figure this out. They want to do this on a quarterly basis. So it was interesting, for example, and comes out of a webinar with Google to put there, where Google said, we are less than 70% protected on our currencies. Who can help? They came to us. Within 2 months, they were 97% protected. 1 month more, they were 99% protected. You never see Google have a foreign exchange gain or loss from their balance sheet, the monetary asset liabilities. You never see it. Why? It's completely automated by FiREapps. That's who we are. That's what we do. Questions on that? One of those companies you never heard of. Pardon? So we only disclose that under we have more than one server areas, and we only disclose that under strict confidentialities. And it'll be really hard to find, to the point that if you were looking for it and you all of a sudden say, I want to, for example, there's questions whether you should actually be able to connect via your website. We don't. So it's pretty hidden, and but there's a big move, as it should be now, because that's the core business, to move into the public cloud. So and the three vendors are Google, Microsoft, and Amazon. That's it. And then you can kind of look at which one of those spaces do you go to, et cetera. Yes, a follow-up?
Don't you face the regulatory challenges with that? Because some of the companies like Oracle, they host this product, but they face the regulatory challenge that if it's in the government has the right to get the data. So how do you?
Well, so it's a question. So the question is, do we face regulatory issues when we have data of companies, for example, in the United States? I would not call that regulatory issues. I would call those legal questions. So when a corporation has the question about, and the Germans are most particular about this, they actually don't want it in a different state within Germany. So they got it even worse on this thing. It doesn't become regulatory, can become legal in the United States. So we have a lot of companies, especially in their Europeans and Middle Easterners and Eastern Asians as well, who actually don't want their data touched in the United States. So in their strict confidentialities, you position it there. All three of the companies I mentioned, Google, Amazon, and Microsoft, have actually made a business out of, hey, we can actually get you up and running in your state. For example, Microsoft does it in 2 states. They do it in former East Germany, Magdeburg, and they do it in Frankfurt, where they have their server things, so it's not an issue anymore. but it's always been an issue. I don't want to leave it out, and we've got some trading companies where, quite frankly, they are not very US friendly, and they would never and even think about having it touched, and it becomes to the point where they ask, should I actually have data, even if it isn't in the United States, by a US company? But then the other question that I always ask after that, that's great, you got $1 earnings, you got 14 cents of earnings per share at risk. You figure out whether you want to take that legal risk or you want to put your market cap down by 14%. That's the real question then. That becomes economics. So that's the thing that they always weigh. Typically they go, I'd rather not have a 14% depreciation of my market capitalization. But you're right, it's a sensitive issue, and the Oracles, SAPs, everybody's doing it. But I got news. It's all going there, period. It's going that direction. It's modern finance, if you want to call it that. But it is already there, and it's all going there, and nobody's investing in anything but that. If you try to raise money because you're doing an install perpetual license agreement, you can't raise money. It's as simple as it is. Good luck. Go to a PE firm, go to a large firm which is sizable and say, hey, we're doing implementations only. That's going to be a hard way to raise money because everybody says it's much less scalable, it's much cost of goods sold, it's much higher, cost of deliveries, et cetera, et cetera. So the whole direction is that the investment community isn't even supporting it. And if that doesn't happen, you're not going to survive. There's a question behind there.
Question is around the Google. So Google doesn't, you said that Google doesn't book the foreign exchange gain and loss, but you will have currency fluctuation and it will generate out of it. So where do they book it?
Well, I didn't say they didn't book it. I said they do not have foreign exchange gain or loss impacts. So what they do, as all these companies, and that's public knowledge, is they actually, on the balance sheet, now we're getting into the complexities of this, and bear with me on this for 1 second, but I'm going to try this pretty straightforward, is there's two types of currency risk corporations think about. They think about their balance sheet, and they think about their forecasted revenues and expenses. Okay, let's start with the balance sheet, which is what they manage. The balance sheet is basically looking at all your monetary assets and liabilities and the exposure thereof. So cash, accounts receivable, accounts payable, intercompany loans, if they're short-term, are the major impacts of these. So that gets really complicated because think about all the Google incomes they're getting from everywhere. So it becomes a huge data issue because you want to know your accounts receivable on a daily basis. How do you do that? Where do you get that data from? So what they do is when they have that data, which is what we do and we deliver real quick, is they figure out how to reduce their exposure. On the balance sheet, there's 2 or 3 different ways of doing it. The one that's most well known is obviously hedging. So you go to the bank and say, I want to buy a 1 month forward contract, whatever else is. The 2 other ones are clearing cash, converting your cash over into so you don't have the exposure anymore. And the other one is looking at how you actually manage the intercompanies and the billings. But you can do a lot with the internal part of it. So another customer, Yahoo, they actually reduced internally because they now had access to the data. They internally reduced about over 60%. But it is, you have to have the data. You need to know that it's timely, accurate, and complete to do it. Does that answer your question? Great. Guy, you had a question up there? Okay.
I want to make sure that everybody uses a microphone when they ask questions.
All right, great. Dr. Gibbons.
I won't need the microphone.
Practice, practice, and practice he's had.
Okay, I just want to ask a quick question. You don't do the hedging. You give them the information to work on the natural hedge and then the actual hedge position that they might take in the market?
That is correct. So what we do is we do what you would call pre-trade to the point of preparing the transaction. And then the computer spits out, you should sell dollars, buy euros, and that gets transferred to either single dealer or multi-dealer platforms typically, or sometimes by phone depending on what derivative product they would use. But we own the raw data to the decision, base decision, then the banks do the trade, and then you have the post-trade, which be the treasury workstations, et cetera.
And so the raw data is actually comes from the firm, though, about what their various currency positions are naturally within the company.
That's correct.
Okay, thank you.
Yeah, absolutely. So does that make sense? So typically what you do when you're looking at your monetary assets liability, they're actually all booked in the ERP system. So SAP, Oracle, for example, they're all in there. They're really tricky to get out. That information is really tricky to get out, one. And two, very few companies only have one system. So we have companies that have 75 different systems with different charts of accounts, different quality of data. So it becomes a, only data geeks like us, I usually have a data geek button on me, but data geek buttons like us, they really enjoy that sort of stuff. Most people don't. So there's like the solution at the end of it. Great. Question? Yes? Wait for that. I think we're waiting for that mic just for a second. Michael otherwise is going to go crazy on me. Thank you.
Okay. So my question is, when we do currency trading, there's also a psychological aspect involved. So because people, they take decisions, irrational decisions, right? When people trade, like normal currencies trading, so do you take people's perception into account?
Do I think what?
Aspect, like let's say Japan is falling, so everyone will sell Japanese yen.
Right. So what a corporation wants to do is you always go back, what's the motivation of the people that's making the decision? So you have the people who are trying to profit from those, and then you have the people who say, I benefit nothing from having any sort of upside, but I don't benefit if there's downside. So what I want to do is, as soon as I have that information, I'm just going to hedge it. I'm not going to actually look at the value. I'm not going to speculate whether it's going to go up or down. All I know where it is right now, and given it's a $4 trillion a day market, probably more efficient than any stock market is at 40 billion. So really thinking that through is the emotions you want to take out. But it is a really interesting point, because when you talk, and I do to boards, for example, and the members of the board say, half of them say $1 is going up, the others say $1 is going down, and half of them are typically right and half of them are wrong, and next board meeting they do it the other way around, right? So, and they don't know. So what you want to get a board to think about is the corporation has a portfolio of currency exposures that they want to get to a point where it's immaterial and the company's results, financial results, are agnostic to it. That's what you want to get to. Make sense? Other questions? Well, we haven't even gotten to the meat yet. All right, I'll let you read this one. I think this is really important when you're thinking about a company and building a company out. The way I think about a company is, and there's philosophies and there's different areas, but I think about it in a pretty simplistic, if you want, production facility point of view. You start with product management, thinking about what product to build. Then you go to product engineering, you built that product. Then you go to marketing, you market that product. Then you go to sales, then you go to client services, then you go to HR, and then you go to finance. Those are, in my opinion, the 7 areas of any company. Then when Elon Musk is talking about ingredients of the pie, if 2 of those things aren't working, it's not going to taste good and it's not going to look good. And really what I want to talk about today is those in different stages of an evolution of a company actually become different when you actually focus on it. So when you start a company, you think about marketing first? Probably not. Right? You should be thinking about, well, what product am I going to build, et cetera. So that's what I'm going to kind of take through, and I thought this was really a good phrase to start things off. Starting a business. People do this all the time, and it's unfortunate, are you solving a real problem? Are you adding real value? And have you done the homework to do that? Okay, so we feel it's a pretty big problem to solve, managing currency risk for corporations. The bigger question people had when I said that was, can you actually do it? Which is, it's a fair point, right? So it's really thinking about what is the problem you're going to solve, and then is it repeatable at the end of the day? Is there an inefficiency, really what a problem is at the end of the day, that creates an opportunity for a market? May seem simplistic, but that is pretty important, to say the least. So when we started the firm, we actually did not start off as a technology firm. We started off as a co-sourcing firm. You say, what's a co-sourcing firm? Well, that's a consulting firm that actually owns the results. That's co-sourcing. So what that means is, we said, company XYZ, we want to help you reduce your risk coming from your balance sheet. And they said, well, that's nice. What are you going to do, et cetera, et cetera. And we said, and if we do that, given what you do today and what money you spend today and what risk you've seen, first client luckily had 80% of their net operating income just lost. How do you actually go manage that, and how do you pay for it? So we said to the CFO, very simply, we said, pay us a third of whatever money we save you, which was, by the way, the philosophy of my previous company. And if you don't think we're adding the value anymore, you can leave. Now, it is kind of interesting because in those things, when you do, this happens in the beginning all the time, certainly the first half dozen customers, is we send them the first bill, and I couldn't talk to them for 2 weeks. Because guess what happened? They said, did they really add that much value? Did they really save us that much money? It was million plus, $2 million was the first bill you'd send people out. Because we saved them $6 million. So is it possible to save a company $6 million on currency transactions? Depending on what they do? Absolutely. So then they said, okay, we owe them that. The lawyer said, yeah, we better pay this, and let's keep saving money. So, it becomes a little difficult when people then think about, is that glass a third less full, or is it 2/3 full, or is it 2/3 empty? What is it? Become great relationships, because the side effect of that is currency risk just went away. And I remember the first time when there was an earnings call of the first customer we had, and our parent company is called RIMTech, Risk Management Technologies, but we got known for this product, FiREapps, so it's kind of like RIM and the BlackBerry. Kind of always liken it that way. Everybody ends up knowing the BlackBerry, and few people know about RIM Corporation. So on that call in 2001, the CFO said, we've solved the problem. We will not have it anymore, because the analyst said, wait a minute, you guys have had these huge foreign exchange impacts and swings, and you told us that was coming a lot out of Latin America and the UK, et cetera. What happened? How is it all of a sudden gone? And they said, well, we hired this and da-da-da, et cetera. And you could hear the mute buttons. Nobody's asking questions, and then you should have seen the stock price. And if you never saw impact, you never saw value, I saw it right then and there again. The share price just went. They had lost 80% of their net operating income the quarter before. 80%. That's real money. The second thing is, when you start a business, is find a great partner. And if you look at an amazing amount, and we just had some private equity firms we always talk to. We had one in last night. I actually asked this question. I said, when you invest in companies, do you look for, typically, is it a one-man-woman show, or is it a two-people show, or a three-people? What is it? And I said, clearly, the vast majority of successful companies have two pretty equal partners. And here comes the interesting part, which I completely agree with, that don't like the same thing. Meaning, one of the things that people do all the time, because it is human, is you actually look for people that are very similar and like the same things you do. I absolutely believe that you should have a partner that ethically, morally, you are completely and 100% aligned. You should not be aligned of what you really like to do. So you look at any companies, whether it's the Microsofts, whether it's the Googles, where you look at any of these companies, there's always two. There's always one who stands in the front of the crowds. I guess that will be me. And there's the other gray eminence who does all the product stuff and really gets into that data stuff. And you have to divide and conquer and meet somewhere where there's common understanding and knowledge and appreciation of business. The philosophy of your business, the matrix of your business. Are you aligned there? Do you trust that person, etc.? Of course. I'm going to say one more thing about partnerships. I vehemently advise any and everybody never, ever to do a 50-50 partnership. Never, ever do a 50% partnership. And you look at those are the ones that become lawsuits. when you start a partnership, I believe, is you should right from the outset say, if we don't agree, who has the say? Hard one to do at the beginning, but if you don't get that one straight right off the bat, don't get into a partnership. 50-50 partnerships have a massive track record of ending up in lawsuits. Partnership. All right. Next one, solve it and prove it. We're talking about marriage? Did somebody say something about marriage? Yes, I don't disagree with that one. She has 51% of the shares. Solve it and then prove it again and again and again. And if you don't think you can, that's my opinion, you can get 20% of the value that you're adding, don't start. It's a minimum. I'm a third guy, but I think you should have at least 20%. If you can't save somebody, if you save somebody $1, you do something that actually makes somebody $1. If you can't get at least 20 cents on that dollar, you probably don't have a long-term business. The financial matrix, one can argue those as an experience, should be 10%, should be 5%. I would disagree with it. Now, because eventually what happens in businesses, they get commoditized. So that margin is going to come in. So if you're starting with a 5% out, I'm getting 5% on that, and that's the beginning of a business, that margin is going to keep coming in. So that is one reason why you go there. So when we were a firm, we started off, and they called me a consultant. And I said, don't ever insult me like that. And they know that already. I don't want to be a consultant. Why? I believe consultants actually, and there's a definite value for consultants, I just don't want to be one, is they will advise you what to do. And then they walk away. That's their job. If you actually own the results, are you really a consultant only? I don't believe you are. So really think about it from a consulting point of view and really starting that business out and then saying, when I'm going to consult this, am I going to do this specifically for that organization only? Or if I do this for that company, can I do the exact same thing for another company? And the answer to that question is, if I can't do it exactly like that for another company, you will never have a technology firm, you will never have a repeatable business. But there is this excitement, there is this thrive for knowledge, for sharing the knowledge, for adding a value. That's a really tough thing to actually do, to ask yourself, is that truly something that is repeatable? The immediate answer should always want to be, I want that to be, yes, absolutely, that will be absolutely repeatable. If it's a project, it's probably not a business. Because at the end of the day, we're talking about how do you take a firm from, in this case, consulting firm to a technology firm. Okay? All right. It's the size of the market. How big is that market? So if any business, is that really a market there for this? And how big is that market? I think that's a question one should always ask themselves. Next thing, I think this is a really important one, is then financing. Yes, I know I have a finance background in that sense, but how do you finance a company? So when you're thinking about technology firms, for example, it's really important to start off with a clear cap table, to not have messy early investment things in there, because later on, you won't get investors to look at your company. They'll look at your cap table, say, goodbye, we're out. So they're actually, as much as venture capitalism and PE firms, et cetera, are looking at it, they get excited about your business. They certainly ask about how big is that market, how they've been executing the business. And if all those things check, then they put your numbers into a formula. And they're not going to deviate much. That formula is going to come out with some value, and there's going to be a tight range in that value, and that's it. No matter how great your story is. Because if they get it right, then they're going to have to keep investing to keep percentages, and it goes on and on from there. So it's a really hard thing to really internalize, that companies that value companies really at the end of the day have a formula that they're going to use to see whether they can invest or not, and otherwise we don't think it'll be successful. If that formula ever gets messed up, you will never get another investor. So really thinking about the financing is important from the initial capital point of view. When we did our Series A, and I'm sure lots of you have heard about how these firms do the A's and B's, et cetera, and we've only done an A and a B and then went cash flow positive and never looked back, is when we did our A round, the ink wasn't dry yet. I ran to the bank, Silicon Valley Bank, and I said, I'd like to raise debt against my capital. The firm looked at us like, what are you doing? Well, I'm going back to Finance 301, where I was all taught about debt equity ratios. And you raise your money in the best of times for the worst of times, not wait till it's too late and then try to raise money, because then you won't. And it's something that a lot of people don't do. And if I've looked at it, if I looked at especially Series A's, they go let that thing run, and then all of a sudden if something happens, they don't have enough cash, they got to go to more money. Guess what happens? That's the infamous down round. This is when really it hurts. That's when they own a lot of your business. So really thinking about constantly about the basic principles of finance, as innovative, and you'll hear me say this again and again tonight, is as innovative as your business and your product may be, the business model should be a matrix that we've all learned. Probably a little bit surprising, but if you look at the fundamentals of these companies, that's typically how it works. So really thinking about the financing, the debt equity ratios, thinking about your accounts receivables, accounts payables, the predictability of that, your cash flows, all these sort of things. I don't think there's any magic to it, and I'm certainly not smart enough to break what we've known for thousands of years. All right. Learnings from that. One thing that I wish I would have done earlier on is when we did the Series A round, immediately get 2 institutional investors. When you have 1 institutional investor, they really are just focused on, and they're the ones who have the money. If you have 2 in there, you becomes a little bit more of a balanced thing. I didn't do it, so I said earlier that if you look back at what are the learnings, this is something I didn't do, and if I could have and would have thought about it, next time I would do this. I would literally get for 2 investors right off the bat. I wouldn't just go with 1 if you can. It's hard to do because the timings and they want to own all of it, et cetera, but if you can get to 2 investors initially that are the institutional investors, I highly recommend it. It makes life a lot easier. Okay. I think I said this earlier before, but get a partner that doesn't like to do what you like to do. So in our case, it's product, it's the detailed accounting, even for the company that he likes to do, and I like more the product, sales, financing, and marketing part of this thing. So that's a good thing, but if we both like marketing, for example, then that probably wouldn't be a very good partnership, because then who's watching the product? Because I tell you, you run these businesses, and it takes more than one person to get it to this level and keep watching those 7 areas and what I call the 7 levers that you got to keep dialing up and down. Okay. I am the biggest believer in the next one. And I know that's always one that people go, really? Find people that are better than you. How do you do that? Any suggestions? There you go. We talked about that. I like it. But I went there too. Absolutely recruit. So what we did in the early days is we brought on as the first investor the retiring chief financial officer of this little company called Microsoft. And when you all of a sudden start, our good friend Andy Gage, who's with us, who is good friends of John, John runs our marketing area. When Andy came on, he's like, who's this company and what are they going to do? He's really good. Well, he got interviewed in the early days. He got interviewed by John. He flew to Cannon Beach in Oregon, and all of a sudden he's walking next to the chief financial officer of Microsoft. I think he was inspired to join a company where the CFO of Microsoft says, I'm putting my money with this one, I'm putting my mouth in this one, I'm going to help this company and grow this company and make this company successful. The way you find people that are better is associate yourself with people who can help you find the people that are better than you. And have the mindset of that. It's important to have the mindset of, and I believe there's 2 types of CEOs, the ones who know it all and the ones who don't know it all. And I think the ones that don't know it all end up being the more successful ones. I had last night a conversation with that PE firm I was talking about, and we were talking about Dick Folt. Anybody know who Dick Folt was? Sorry? CEO of Lehman Brothers. Exactly right. Well, he was famous for having a lot of yes people, and was likely, there's an argument that he was the least liked CEO on Wall Street, which is why his firm went down. Because they could have said, well, are we going to let Bear Stearns go, or are we going to let Lehman Brothers go, for example? He had a reputation of going through at senior managing director meetings and going, you guys need to trust me, we need to all work together. You know what this part was? He had a baseball bat in his hand at the dinners of this 200 senior managing director partners and hammering this thing. He wanted loyalty. But did he believe that anybody was better than him? I'm going to argue he didn't. Questions? Next one, and Robert already alluded to that, is before we hired the first person, we sat down and said, who are we? Who am I? Who do I want to be associated with? I need to have fun, so I want to surround myself with the people that are like us, like me, like my partner, Corey Edens. So we came up with, I want to be the very best at whatever I do. So I want to surround myself with people who want to be the best at whatever they do. I never wanted an A-. A lot of people are happy with an A-. Hey, on the report card shows like an A. I didn't want that. I wanted to be the very best. You got to have courage to tell the CFO of IBM, you know what, the way you're doing your foreign exchange risk management on the balance sheet, no wonder you're having all those hits. Say it in a nice way, we'll talk about it in a second. You already mentioned it. Lean. Be smart about how you spend your money. E, enjoy who you work with. A, I laughed about this one the hardest last night, is achieve. Meet your goals. You're not a .org, i.e. you're not a nonprofit. And at the end, probably the biggest one is respect. That's who we are. It actually makes it really simple to interview people. Because when they come into my office, I don't interview. If John says, I've got somebody I want to bring in, I don't interview them about their qualities of whether they know marketing. I don't interview somebody in IT going, do they know how to program? Are they agile? Not, do I understand it? Yes. I don't interview them all about that. I tell them about our culture, and I ask them to really hardly think about, do you think you will succeed in that culture? And if the answer to that question is maybe and maybe not, probably shouldn't come here. Sometimes they're not happy when I interview them like that. Maybe sometimes not as harsh, but it is that simple. If you don't believe in that, don't come here. If you want to go, hey, listen, I want to have a good job, but I have all these other things I want to do, and B is fine, great, you should do that, just not here, because that's not who we are. So to right up front, creating that value system that actually then guides the company, not just from a hiring perspective, but from a decision-making point of view. If somebody becomes respectful, I tell you what, I get the call going, hey, isn't this going against our value system? We're not enjoying working with this outside vendor. That goes against our value system. We actually have, in the first, 40, 50 contracts, we had the salesperson put a yellow sticker on the contract and write on that contract, we will enjoy that customer. Signed. And if that yellow sticker wasn't on there, I wasn't signing the contract. We need to enjoy the customer. It's not just about enjoying the people that you work with within the firm. I want to enjoy our lawyers, I want to enjoy the accountants, and I want to enjoy the customers, for example. Really important. There's a question.
Yeah, a moment ago you mentioned you have to have courage to go out and talk to a CEO and tell them they're potentially not managing their balance sheet the way that they should be, and kind of start to make your pitch as to why they might use FiREapps. I was just curious as to what reasons you saw kind of in the third quarter, fourth quarter last year as we were seeing a lot of dollar strength. Constantly on CNBC and earnings calls, companies using the strong dollar as an excuse for why they were missing earnings.
Mm-hmm.
When there are opportunities for them to manage their exposure tighter, is it that they don't know and they haven't adopted the tools to achieve kind of that level of success, or is it that they philosophically just don't believe in currency management and managing that tightly?
It's a little bit of both, I would say. It's one, people don't know that you can manage it. Two, and as part of that, they look at currency. It's really complicated. I mean, financial accounting on this is difficult, so it's a tough thing to do. And as long as everybody else is getting hurt, they're actually going, well, everybody's getting hurt. Well, then all of a sudden companies come out and say, no, I don't have this problem anymore. So that's how you build that market. So for example, we built with our track record the market that no company should have 1 cent EPS hit due to foreign exchange from their balance sheet. That's a benchmark today, and we go out. I'll be doing that tomorrow morning, 7:30 in the morning, saying, here's the companies who do this really well, and here may be some that don't do it so well. Now, I don't slam those too hard because they're going to be my future customers, but at the end of the day, that's what you do. You have to educate. So we took a long-term approach through marketing, to educate the market about this solvable problem. They all know about the problem, but is it solvable? And is there a track record? We have a 10-year track record with some companies. They've never seen a 1 cent earnings per share hit due to foreign exchange. That's the answer to that question. But you're absolutely right. It's tough. It's why do they still have it? I don't know, actually. Because they still think, well, I shouldn't, or I don't need to, or I can't. Please, there's another question? You have a question? No? Okay, great.
We
All
have
right.
a question. We have a question from one of the live stream viewers. Suzanne Evangeline is in Los Angeles, listening in. She's going to put you on the spot a little bit with this question that's very similar about pushing back on your leaders. She says,
okay.
"We have a president who is a yes man and demands loyalty. Is the country in trouble?"
We're at an international university, and I am going to respect all nations and not going to get political. I think that this is about, at the end of the day, about what type of company you want to build, what type of leadership you want to be, and what you want to be known for. And there's the argument of, was it 48% of people didn't like him, liked him, whatever else there is. You will make tough decisions, and I think one of the most important things that anybody should ask themselves is not just what do I want to do and what do I stand for, but equally important but much tougher is to say, who am I not and who don't I want to be? So that will suffice. You cannot service everybody. In whatever business, you're not going to make everybody happy. You're not going to get every last CFO to say, I want that 1 cent EPS. And I'm not telling them to, by the way. I'm telling them to, at the end of the day, there are tools that could reduce that risk and might increase your market cap. You make the decision. Because every leader in a business or politics, but in a business, it is their job to understand risks and take calculated risks. What I don't believe their job is to take an uncalculated, speculative risk. And if that is their job, they better communicate that very properly. Make sense? All right. Thank you for that question coming out of Los Angeles. All right. Let me go to stay in California then with Larry Ellison, who says, when you innovate, you've got to be prepared for everyone to tell you you're nuts. I know I did not place that question, by the way, but it's rather appropriate. You got to listen to people, but it's always funny. So there's one question I always ask when people say, listen, can you do this? We don't think you should do this, or we can't do this, whatever else. We cannot do this. We should not do this. My very first question is, why? Is it illegal? That's my first question I always ask. Is it illegal? Because if it is, you're right. Any other reason? Let's talk about business. Let's talk about whether we should or shouldn't do that. What's the investment of that? What's the ROI on that? And you run a business properly. But the question that I don't like, or when people say you can't do that, they will always get the first thing is, why is it illegal? And then you can talk about, well, we shouldn't do it. Okay, now we have a different conversation. Okay? So I think you got to listen to the people, and I've seen some leaders who then don't want to listen to anybody, surround themselves with people that I was talking about earlier who don't want to listen. All right. So one of the things that people get very excited about when they hear about technology firms, when they talk about software as a service, cloud-based technology firms, I want to be that cloud-based technology firm. And what they end up doing is they take technology and make it a precedent to what's the problem or business they're actually solving. So they're going to build something and everybody will come. Good luck to that. And if you look at even the early ones, is, you know, when you look at the Facebooks and all these sort of things, they didn't come overnight. There was a need that they saw that they wanted to define, whether it's communicating differently with people, whether it is searching differently. They were solving a problem and then leveraged technology to help solve that problem, not vice versa. A lot of people say, oh, I'm going to build this great technology because whatever that is. But if you put technology in front of, and that's the exciting part, in front of the business problem, you're going to have a problem, my opinion. You should be able to solve a problem and say, now I want it faster and better, and I'm going to leverage technology to do it. Because technology, at the end of the day, is all about faster and better. That's it. Reminds me of, does anybody know what the next level of, when you go gigabytes, you go terabytes, what's the next level of data? Petabytes? Petabytes. This is a difficult one. When you have a consulting firm and you go into the co-sourcing business, to not fall back into consulting is really hard. And I always say it may take some stubbornness to really say we're not going back there, because there is excitement about it. You have smart, enthusiastic people that are knowledgeable, that understand this very well, and they want to solve that one problem for that one company. If that is not scalable, then that is consulting, and if that's consulting, you don't want to go back there. But when you go into a technology business, when you grow that business, not go back is sometimes really hard, because somebody says, but I'll pay you a lot of money for that. And maybe that helps you finance. You do that once or twice, you're not going there. So really having the idea, as you're going from consulting, you can't go back. What makes that really hard in today's world, initially consulting engagements make more money than recurring revenues from technology. So I told you earlier, we're making $1 million plus a quarter from companies. They're paying us now $100,000, $200,000 a year. Average sales price, maybe, depending on what it is per product. Not in the millions. You go, wait a minute. I thought you were making millions. Now you're only making $100,000, $200,000. Recurring revenue, what's my cost of goods sold of delivering it? All machines. Very different model. But you got to be ready for that. Not just to write bills anymore that are $1 million plus, but now you're writing, maybe on a monthly basis, $10,000 a month are coming in, instead of every quarter $1 million. So actually, when you transfer a business from consulting, initially you make less money. And that initially is a lot longer and a lot more painful than anybody will ever tell you. While it looks great, yes, I'm very proud to stand here and do that and having gone through this, it wasn't always fun. But my number one cheerleader is sitting right there when it wasn't as fun. All right. So prepare to learn is what the next one is. So we're really here in the product development stage of this, and really looking at, as the next stage is, as you're getting your first customers on in the technology space, is you get your lighthouse customers. So you get them to understand you've built something, you want to build further and you investigate further and you want them to prove out, and this is tough to go and somebody say, hey, you'll be one of the first. Can you help me out? Do that in product development in the initial stage is not always easy to do. All right. When you come through this product development and release, is you can't forget to understand your pricing. That's a difficult one to do, especially when you go into a market where nobody else has it. How do you price that product? I always wanted to do it based on value, but the market is often telling us, well, we still want to compare you to this sort of product. So eventually, I believe we're going to get there to get even more higher valuations in this, because we're adding tremendous amount of value. But sometimes in the industry, people, that's what people do. Is marketing is within split seconds, you will be put in a box, and there you will be compared to that box. Okay. I gotta be a little bit sensitive of time when I go through some of this a little bit faster. Yeah, I think I already talked about build it and they will come. good old Syndrome's days, looking back at consulting industries, et cetera, and going back to the consulting when we used to make a lot more money or send bigger bills up front is there. Pricing to value is always difficult to do, and we talked about that one already as distributions. Let me get then into actually, and this I think is really important as you look at a technology business, at the end of the day is, I'll let you read that first yourself while I have a drink. Laura? Who's actually the people that when you do it is your first channel is always direct. That means you're yourself are selling it, and you're your first, better be your first salesperson yourself in that, and as you're building that out. Then you start thinking about, okay, who could benefit from the value besides the customer? Who can value from the benefit from the value you're creating? So in our terms, and Professor Gibbons touched on this already, it actually was the banks. The banks are saying, wait a minute, if you can actually get Google to increase their hedge ratio from 60-some% to 95%, percentage-wise, your trading volume just went up by 50%. When Google at an AFP event years ago in front of 6,000 people and a lot of bankers said that, you'd be absolutely amazed how many bankers just lined up wanting to talk to the treasurer about that business. So the banks are saying, if we can help, how do we help? And so what's the channel? So in our case, the channel was that we said, listen, the companies often are tight and they're very big costs, have cost centers in treasury, and they're very tight and they don't have much money in those cost centers. That's a problem. So on the other hand, treasury wants to really solve this problem and wants to prove that this problem can be solved. So what the product, the channel that we came up with is saying the bank, very transparent by the way, will pay for the licenses on behalf of the customer, and then the customer will look to do more profitable business with that bank. Not tied to it, no legal obligations, nothing, but as in anything, if you all of a sudden are bringing somebody and adding value in whatever business, and you will get reciprocated. That's just the way, that's the beauty of it, of humans. If you say, listen, you're going to help me do this, I'm going to do more business with you instead of somebody else. Not that foreign of a concept. But it was interesting to go through a bank and say, we've got a technology, would you like to resell it? And not only did we go to some bank, we went to the #1 global corporate foreign exchange bank in the world called Deutsche Bank. Deutsche Bank said, we will buy licenses from you, we will prepay those licenses, and we will go with you to our best customers and help those customers leverage your technology to improve their earnings per share. And that's been a great program for over 5 years for us. Unusual, most people think, well, I should be, maybe it's a consulting firm, et cetera, and there are channels there as well. My point being is, as you're thinking about business and thinking about channel partnering and therefore leveraging channels who can get you into businesses faster, think about who can truly benefit. Is there somebody asking a question there? Or? Yeah. All right.
This is coming from our Facebook Live feed. Mehmet Munzer asks, why don't large tech companies like Google develop this financial aggregation and hedging service? It is not a proprietary calculation, but a data aggregation service.
It's a really good question. Anybody here have pens in their hands? Anybody build them themselves? Probably not in that business. Google doesn't see themselves in that business. SAP doesn't see themselves in that business. Oracle doesn't see themselves in that business. And successful businesses focus on what they do best. They're not in the business of aggregating data per se, but they're more in the business of optimizing it and making actionable as a search engine. That's their business, their core business. And the most successful businesses are the ones who stick to their core business. What financial applications is Google going to offer? Now, are they going into, I'm going to have different businesses, et cetera? Yes, but that's solving one problem that's going to cost them, by the way, a lot more money to build it themselves if they can. So, interestingly enough there, Google said, well, we can try to hire 13 people and see if we can solve this within the next 1.5 years or 2 years. And if they don't, what happens to those people's jobs? Should they really? This is tough. Currency is not an easy thing to do. How do you get the data? Let me ask you a question about that. A transaction has 3 currencies. Any transaction has 3 currencies. Anybody know what they are? Ask Google, the people that were going to do the aggregation, that question. Now, the Treasury now knows. Reporting currency of the company, US dollars. Functional currency can be in a subsidiary in Sweden. Transactional currency can be Russian rubles. You can have a transaction, obviously, there where all 3 currencies are the same. But understanding the relationships and being able to make that actionable is where it's difficult. What's the relationship of the transaction currency to the functional currency, and why is that important? Do I want to look at it from an economic point of view? Do I want to look at it from an accounting point of view? So, enough time and money, anybody can do this too. Bring the people together. Spend $50 million in doing it. Is that worth it if you can get it for $20,000, $30,000, $50,000 a month? I would say not. So it's like anything. Am I going to have those, create my own pens right here? I promise you I didn't build this pen. All right, great question though. You know, an old principle is KISS, keep it simple, stupid. There's certain things you got to, especially in business, really keep simple. So what that means in channel distribution, I had a good business relationship with Brian Moynihan, who's the CEO of Bank of America at the time. And he said to me, and I'd gone through this before because I had some other relations with Morgan Stanley, et cetera, where we did in my previous company. And he said, any channel, any big leverage, whether it's an Oracle, whatever it is, or in this case the Bank of America, is a huge engine. And if you can't put a simple product out in, garbage will come out. So keeping the product that you want your channel to distribute simple to one SKU, to one price, to something that people can pick up and never get confused about is key to success. If you're going in there and giving your entire palette of products and you expect Deutsche Bank to, a foreign exchange person at Deutsche Bank to say, you need this and this, and we're going to therefore need this monetization, and therefore it'll be this pricing, you're lost. So think about the distribution channel and how you can make that really simple so it's consumable. And you work with them on that. You don't get that right the first time. So when you have a new channel, you figure out and you try to figure out, can we do this as a trial? iPhone and AT&T are a great example of that. Why did Apple choose only AT&T? Was it because they're nice? Or because they're trying to figure out how to distribute their phones with a partner and kept it real simple? Now, people learned from that, so go back to Google in that sense. Google then said, thank you, Apple, for figuring that out for us. Now I can go to all the vendors, the Verizons, et cetera, of the world, and I'm going to distribute my phone to all of them and through all of them at the same time. Okay? But iPhone still has a significant portion of that business, obviously. They were first mover, but they kept it real simple, and they worked with AT&T. They didn't get it right the first time. Now, the products were interesting, et cetera, but distribution channels, especially in technology, but certainly in many other businesses, are really important, and therefore, keeping it simple is really, really important as if you be successful in this. As you're going through your distribution channels in that port, you actually start going into making sure that your client services and your channel management really are key and successful. There's a question right there.
Yes. Can Google, Amazon, or any other one create a cryptocurrency for the future, like Bitcoin or something like that?
Yes, is the short answer of that. Would they want to is a question, but anybody, you have over 10,000 cryptocurrencies out there today, as you all know. There's 2, 3 that are very successful. And there's pros and cons, and we can maybe at the pub have a conversation about the Bitcoins of the world, why they won't take over the world, but they will add certain values, certain transferring in there But my opinion is it's never going to take over the world. Certainly not Bitcoin is. But cryptocurrencies, certainly Google can do that. They can create their own currencies. And you, in a different fashion with different words, already have that in a lot of companies. You have Oracle saying, I'm going to give you credits. Well, what's the difference between credits and cash in that sense? I'm getting an Oracle credit for this product for future use of spending that money. That's no different. Now, can you then trade, if Google creates one, can they then create it to the point that it's exchangeable for many others through other currencies? Yeah, they could. How successful will it be? How liquid will that be? How big will that be? How accessible will that be? And there are the regulatory parts that we talked about earlier, in my opinion, really going to kick in. But that's an interesting question there, interesting thought about that. All right, let me kind of move on this. Sorry, we're going to go in there a little bit faster at all there. So when you get to the stage now, you've created your product, you've got your customers, your first, whatever, 50, 100, whatever, if it's large enterprise customers. Now you start, and you have your one product that you really got done. Now you've got, I always thought about it as you have your stereo receiver ready. And at some point, you're not going to get more money by adding small functionalities. Maybe the mute button gets the value up a little, but probably not too much. Okay, so at some point, you got to think about, I created the product, it's ready to go. So then you ask yourself the question, do I just sell receivers? Or do I think about, are there other products now that have a reputation, you have a quality receiver, that I should also build a CD player or a blue, whatever that is really thinking about, are there other products? In our case, there was. We started purely with the balance sheet. We focused myopically on monetary assets, liabilities. If somebody said, I want to now look at forecasting my revenues, expenses 12 months out, sorry, we don't have that product. That's what it was. Because we wanted to get this first thing right. When we did, then we said, okay, now let's build the second product. Now, what we did as a business principle, a matrix part, is we always use the same amount percentage-wise of revenues as investment into research and development. Again, it's a matrix thing. You take X percent, and luckily, if you continue to grow at the 40%, 30% that we do, you go in there, you go, so you keep spending more and more, 30, 40% more in research and development, that starts to become real, to the point where you go, you better be thinking about either other products or you just sell, sell, sell. So in our case, we ended up starting to build the cash flow product, currency analytics products, et cetera, et cetera. Well, what you do then is you end up formulating and really defining product management into its own role, which is a really difficult role because it ends up becoming the center of the triangles, if you wish. In this case, you see the strategy, et cetera, on there. The other way to look at it is there are three areas that product management should equally touch. One is, done the research, now I want to have the technical interdependency between product management and actually building the product. That's usually the easiest one. It's like, okay, we figured out we want to build this product, we're going to build it, and we tell IT to build it, near the qualifications, the requirements. At the same time, you need to be interacting with sales and marketing. You need to be communicating with that. So product management should have the vast majority, if not all, of the product marketing. Now, you may not always have all the people that know how exactly to do each part of it, so you start mitigating that. But ideally, you have product management who runs, for example, all product marketing. Okay? So product management is a really tough thing to do because you end up inserting it to an existing organization and formalizing and institutionalizing, and that's a hard thing to do. Not easy to do, especially in a technology firm. Okay? So it really comes back to is as you're adding the product, thinking about your strategy, thinking about your relationship to sales and marketing as well as to technology. Okay? That becomes difficult. But now you get to a level of maturity. This gets actually really hard. You think you celebrate and go out there, I made it. We're making money, we have a great product, we have lots of customers, we're recognized. Now you have people that have loved the entrepreneurial part. I loved building a business. They solved the problem. Now we solved the problem. Well, there are people who say, I want to solve another problem. So am I really the right guy in that job or not? Which becomes difficult because they know that business inside and out. So how do you position that and transfer that from that stage? So as we've gone through this very entrepreneurial stage of starting it, then thinking about what products you're going to do, then actually going through your channel and your sales distributions, now you're at a level of maturity where you have your product management in place. Are they always the same people who love that part? No, they're not. So then you make a decision of, do you want to keep those people because they're loyal and they're great, and you figure out how to keep integrating them, or at some point do you say, you know, this is not actually what they like to do anymore. They love to do the entrepreneurial, they love to be the first to do something, they don't want to do it 100 times over again. So there's stages that you need to realize as you're growing a business what people enjoy more and what they don't enjoy anymore. I think that's really important in these things. Being honest with yourself is definitely part of that. It's a really hard thing to do in those stages. Then it's unfortunate, but you will have turnover. You will have people leaving you for all sorts of reasons, and sometimes you will need them to leave because they don't fit in the organization anymore. Now, if you've done your value system right, most of them should. Now they just got to figure out whether they still enjoy being in that environment as the company matures and grows. Questions about that? The pub's getting awfully close, isn't it? Liquidity event, I've done one. I'm not in the second one yet. At the end of the day, as anything, keeping the records clean up front is a great thing to do. It seems so obvious. But you'd be absolutely amazed how many companies don't do that. Be absolutely amazed. And there was I was co-speaker with for the founder of, not Knight Trucking, the other trucking company, I can't think of it right now, but anyways, they went public. Which one? Penske, no, Swift, sorry, thank you, Swift, which is obviously in town here. And he was talking about, if they asked him the question, if you had to do it all over again, what would you do? Now, you may know or may not know the story, but as a CEO, one day they went public, and the board got together and ousted him, and he was basically the majority shareholder, a very large shareholder in Swift, to say the least, and he got ousted. Why? Because they said the way that the books are run, the way we have this thing is, everything is about sales in your organization, and the compliance part as a public company isn't there, et cetera. They ousted him after taking it public. So at that point, he looked back and he said, if there's one thing I'd do over again is keeping my records clean from day one. It doesn't mean that they were dirty, that they were cheating, but they just weren't up to the par, up to the level of compliance that they expected a public company to be at. I think, quite frankly, is you got to keep that really clean from day one, and it becomes a lot easier to keep it that way. But it's hard, because when you think about spending money on these things, you think about, I want to spend money on sales, marketing, product. Do I really want to spend money in finance? And the answer goes back to those 7 areas, and one of them being finance. I know he's looking at me going, I want that beer. I agree with you. All right. I think that's about it. I think I'm going to just stop at this point and open it up after this to some questions. But really, I hope one of the takeaways of this is when one runs and starts a business, et cetera, while the product can be innovative, I don't think your business model should be. That doesn't mean that recurring revenues are interesting, but I personally don't think they should be. We all learned the basics and the fundamentals, and those are still to this day important. And the people who think they can fast track it, cheat it, cut corners, et cetera, I don't believe it ever pays. I certainly wasn't smart enough to ever figure it out. So, Robert.
So, Wolfgang, which Thunderbird students about to graduate do you think should be applying to your company? And which students should just stay away from your company?
Well, let's start with the best. And go who people who want to believe in the system. I tell you, people who want to learn corporate foreign exchange, there are so many jobs. I was here when job market was really bad, and I would tell everybody in that room, you want a guaranteed job coming out of grad school, understand corporate foreign exchange. Nobody wants to do it. Nobody likes it. It's complicated. And there is an absolute deficit of companies of people that understand it, and nobody wants to do it. The jobs are amazingly open. I can tell you 5 companies right now, right off the top of my head, who would like to hire more people in corporate finance and treasury to actually understand how to manage currency risk. The good news is in today's job descriptions, many are asked, do you understand how to manage leveraging FiREapps? So it's a nice little quality to have with people. So this is a good training ground to do that at. So hopefully that answers your question. Yes, Professor.
This has been a really fascinating talk, but maybe you could give us just one more clue. Your experience is primarily in a service business. Is there anything really unique in the service business that you learned that's different than, say, a manufacturing business or some other resource-based business?
I actually don't think so. I actually think that whether you're, I even look at our company as a production line, quite frankly, as you always think about product management, et cetera, as I mentioned earlier. I actually feel that finding a niche, and that's why I think hopefully this is somewhat applicable today, as I'm sure not everybody wants to start a SaaS company coming out of this. Maybe some of you do, but not everybody does. But is these principles and these things that I talked about on purpose, which I try to stay broader, is about running a business, trying to bring a service and therefore a value to somebody. Whether you're manufacturing bolts, you still have to figure out, am I going to do the best? What quality controls do I have? So whatever you're delivering, those principles, in my opinion, still stay there. So I think, maybe you positioned that for me. Thank you for that. But that's what I really believe. I think that a business is a business, and they're all exciting. And the beauty about, I really think about the United States as I'm an immigrant, is that it really motivates people to do it. And I think the other thing is what I felt when I was here at Thunderbird is it was the same environment, but it was global. That's what I loved about it. Whether you look at the jacuzzi fountain, et cetera, the conversations were about global inefficiencies with the sensitivity about cultural differences. So when I get the questions on the politics, I'm going to block and bridge those. Yes, please.
Yes.
Which ones? These? Yeah. Oh, you just want to see it? Yeah, absolutely. That was easy. All right, another one easy
I'd
like
like
that. Please,
Actually,
I will get to you guys. Yeah.
Oh, well, I was going to add something. We've had several people on the online views asking to get the slide deck. So if we can get our hands on that, we would gladly share it.
Well, you'll negotiate through that. Yeah. All right.
I've also got a couple of new questions that have come from folks on the live stream. Rob in Breckenridge asks, how do you define an entrepreneur? What attributes, in your opinion, make up an entrepreneur's mindset?
Wow, that's a tough one. I wouldn't even know where to start to begin that one, and we don't have another half hour. At the end of the day, a lot of people say, well, you're an entrepreneur because you did this and you've done this over, so aren't you a serial entrepreneur? Look, at the end of the day, I enjoyed solving a problem and surrounding myself with people that do and creating an environment where I can do it. I think that it probably takes people who are willing and have the environment around them to willing to take unusual risks and really not care too much what everybody thinks about them on that day. I think that they have to have the maturity level and the thoughts to think about, I'm going to do something different, be proud of it, but not just do it because you want to be different, but really think about it. But it's a really good question. I think that I've seen the entrepreneurial classes, and they're great about defining what is an entrepreneur and what isn't. Maybe I fell into it, but this is what I love to do. So I don't want to retire and look at some things. This is what I love to do. So does that define an entrepreneur? Maybe later on when then one is successful. But I'm going to go back to don't do it for the sense of just I want to build a business. Really, that is not a good start. And I think as hard as it is, it's an undercurrent. But you should say, hey, I found a problem to solve that adds value, and I can get paid for that value. And with that, I can surround myself and do the dream about actually surrounding myself with everybody I want to. And the misnomer about being an entrepreneur is, wow, you're your own boss. You always have bosses, whether they're your customers, whether you're investors, or whether you're your wife. Oh, sorry. Yes,
I have a question. Earlier in your presentation, you had mentioned the size of the foreign exchange volume that goes on a day-to-day basis.
Uh-huh.
And your app advises a number of companies on what predictions they should do in order to mitigate their currency exchange risk, correct?
No. So we actually stop there. So basically what we do is we help them understand what their exposure and therefore the resulting risk is, and then they make a decision what to do with that. My prior life, I was actually in building, that was my first, is where we actually built models and technologies that had predictive skills. I would look predictive as faster than the average, understanding what the value is or isn't, and therefore making decisions based on that. But today, we completely stay away from that. We are purely in the business of helping people understand their exposures, and B, create a currency-sensitive environment. So today, people leverage our technology. We talk mostly today about the risk management side because that's your first level of learning, is about how you manage risk. It then goes much further because how do you actually look at your business? So what are your true cost of goods sold if you're building something by buying it in yen, and then you're transferring it over to Korea? Well, now you have to redenominate your Korean won. How do you actually know what the economics of that transaction are? So we go much deeper into currency analytics, but we do not look at anything that predicts or has predictive skill sets, if you wished, for the market. Not at all. It's purely, that's their decision, what risk they want to take, what levels. That's where the banks will help, et cetera, et cetera. Is there a couple here? Say one more. Yeah, do the follow-up if you have.
I was just going
they would like to see
that you advise on that, and probably obviously a lot of the time they're taking that advice since now their earnings per share are not being hit by their currency risk.
So I didn't understand that question.
Well, they're using your software to make these decisions based on themselves. Do you know what's the volume that people of transactions, currency transactions, are used by your customers doing FiREapps? Basically, what I'm trying to understand and get out of here is, can you ever get to the volume to a point where it's now actually by using it, you're moving the market itself?
Understand what you're saying, but I don't believe so. I think you'll always have people who want to buy and sell, and it's so unique to it, and it's so liquid, it'll be very large. If you push at the same time $5 billion to the market, it will move the market, no question about it. But really what we're seeing is corporations really don't time it. They do it when they know their numbers and their exposures, and they hit the button, and that's at all times, so it's rather diversified. It's a really good question, though, when you think about the speculative angle of that.
And we have time for about one more question. So,
hey there.
I will get you guys afterwards. Yeah, sorry. Yeah, go ahead, please.
Hi. So, I mean, it's pretty obvious you've raised venture capital, an A and a B. You've had a liquidity event, hired people to join your team, executives as well. Just wondering, would you happen to have any rules of thumb for us for how do you go about conducting a successful negotiation? I'm just curious how you go about thinking about it and how you try to win them.
So let me make sure I understand the question before I get the microphone away. So you're asking me, is there any negotiations, skills that I've had that have worked in the past when I've gone to valuations of venture capital firms and PEs? Is that the question?
Venture capital, the liquidity events you've enjoyed, and even go about hiring employees, right? What are just general rules of thumb that you use when it comes to negotiating?
The first one is, this is the hard one, is tell them the truth up front. So don't hide anything and don't create a bunch of surprises and say they won't find it. They will dig and they will find. So tell it right up front. Here's the story. And it's the good and the bad, and it's remarkable that there's no company who's perfect, so they will know that as well. And you put up front, here's what happened, here's what there. So that's the number one thing. Right up front, be very honest about it, why you're excited about the business. Talk their language. Talk their language is probably another one. So one of their languages is they will have, and you can do this with any company, one slide, 4 quadrants, and you say, here's the company, here's the people, here's the customers, and here's the accessible market. Okay, there's just standard stuff. You'll see it on the internet all over. Speak their language as soon as possible. They'll respect you faster with it. Learn what they want to talk about. Do they want to talk about LTVs and CACs? Well, don't be surprised when you go to VC and get that question. You should do your homework on those things. So really doing the homework and understanding it. Coming in with confidence. The hardest one is don't be defensive. You're not Facebook. You're walking in there. Well, okay, I'm not Facebook, so I've only had a 30% growth a year, and I know they've been growing 100% a year. You'd be absolutely amazed when you really look at it, how few businesses grow at that and actually make money, et cetera, et cetera. Be proud of what you're doing. It's probably another one. And when it comes to employees, build a great team and be careful, hire slow and fire fast is the old saying, and I think that's still very applicable. But you start by who you put on your board. You start with after your partner, who do you put on your board of directors? Really important. And the advice there is, this is really difficult for companies to do, is don't just take money. Really have people who are going to help you, who are excited about your business. There's a lot of, they have terms for it, people call it dumb money, whatever they do. There's a lot of money out there. People get, hey, listen, I got my first bid, I'm excited about it, is really know them. Really get to know them. Really spend the time interviewing them as an investor. I know you get excited, but everybody does. You get hey, they're going to pay you for something. Great, isn't this great? Let's go. No. Let's figure out what's going to do. So a interesting side story is when we did our Series A, we actually negotiated, it's still in there, one of the two things that we negotiated, we said, we don't want your money unless one of the things was, don't give us the money. We had all the contracts signed, but in there was, you help us find a chief technology officer that's really good, because that's the first stage on there, as we talked about a little bit earlier. And we don't want your money. We're not even taking your money. We're not taking it out of escrow until you've helped us find that chief technology officer. So have them help you find the people as it gets started is really key. If you want to find people that if you believe in, you can find people that are better than you. I certainly believe that's how you start, and that's how you have to mean it. To the point, they'd never heard of this. He said, what? You kidding? The other thing about it is when you talk to venture capital, yes, there are processes and there are formulas, and you have to respect that, but make sure that's what you also want. One of the things that we did is before we took venture capital, which I did not do in the first company, I read, and my partner, Corey, we both read the book, The New Thing, twice. It's the story about Jim Clark and the first two companies that went under and the learnings from what he felt he learned from the VCs and the Ps. So there are interesting reads about these sort of things, but before you take a step as major as that, certainly talk to the people, but that's a pretty interesting book. Starts off with the guy who, Jim Clark building a bigger boat than actually the one we had in our first company. Kind of a little side story, but it's a really interesting book to talk about as you're taking initial capital. The other thing is, how do you find it? How do you look for it? That's not easy to do. Is how do you actually get in there? One of the things that we did initially in Series A, though we didn't end up going there, is we actually, and we were told this, is we went to Palo Alto and went to whatever 3,000, whatever the building is called, and there's a little big lunch area. And we spoke very loudly about this exciting business, and all of a sudden people started listening. Whoa, is there the next opportunity? Are these next? Whoa, did you hear that? They're meeting with these guys. Are you meeting with them? No, are we not meeting? And you can actually literally create it. It's quite interesting how small also that community is. And it's unfortunately not too many in Arizona. The typical ones is where the typical ones are. And it's interesting when you talk to VCs and PE firms in California, a lot of them actually don't like doing business in California anymore. Because there's a lot of risk in California too when it comes to IP, when it comes to employments, what people can take with them, et cetera. So they look for all over the place, and so this isn't the Mecca. We have, unfortunately, in this government, whatever, side one is on, doesn't matter, in Arizona, really not spend enough time thinking about how to build the business. It's still very real estate oriented. And in my opinion, we missed the boat versus in Austin, Texas, for example, or Colorado, or some of those places. We did so far, so hopefully that changes. But in Arizona isn't the greatest place to be for that. But a lot